I've been trying to figure out where to begin this conversation because I have a feeling that many of the threads that we're going to pull out end up getting tied together. But we'll begin with Donald Trump. People wonder, and I think you might have an answer, is what he says, is what he tweets, and are the expectations built on those things noise, or are they deliverance to a better place, let's say?
I don't know.
What do you think?
It could be either. I think there's some things we know. I think we know that Donald Trump is a businessman who is responding to a population that has been not well served and is important, and does want to revitalize the United States with business. I think we know that he's more protectionist. I think we know that he can stimulate the animal spirits. I think we know that he's aggressive. We don't know whether he's aggressive and thoughtful or aggressive and reckless. So we have to, there are mixed signals there. The administration that he's chosen around him, a lot of the people are quite capable, I think admirable. Good group of people around him, generally speaking. That's a good sign. How he works with those and how it all works out, I think, is yet to be seen.
You believe, Ray, in the great power, if you will, the inevitability of cycles. How much can Donald Trump extend? How much can he slow? How much can he interrupt cycles?
We were at a spot where there was a debt cycle. There is a debt cycle, lot too much debt, and not much monetary policy. And the traditional ability to have fiscal or monetary policy to stimulate the economy and also get to the people who are his constituents
was kind of broken, wasn't it?
Okay? What he's brought in is a capacity, perhaps, to stimulate animal spirits. Something very similar to 1980 to 85. I would do the analog, okay, with Ronald Reagan.
First term of the Reagan administration.
First term of the Reagan administration. In other words, deregulation, getting something going in terms of business spirits, more supply-side economics.
And then ultimately tax reform.
And tax reform. The difference, I think, is that then we were in the depths of a contraction, so we had a lot of room to grow. And we had an ability to lower interest rates to help to stimulate that when the dollar rose. Those conditions don't exist in the same way, so this is going to require engineering, excellent engineering. So the question is the skill set and the ability to engineer this well there or not? We don't know yet.
Too early to say.
Too early to say.
So what does that mean? If you're thinking about things the way that you think about things, if you're thinking about the business cycle, if you're thinking about the credit cycle, if you're thinking about the long-term debt cycle, do the cycles play out as they were playing out heading into this election?
They are the dominant forces.
Still
so
there's only so much.
There's only so much
that Trump can do.
Okay? But he has found a way, or there exists a way, to stimulate having to do with animal spirits. Okay? And so that is potentially a brighter spot than we thought existed, right? So it has to be engineered prudently and well. So you can't reverse the cycle. It's very similar to the 1930s. Let me take you back to the 1930s, because this is a dominant influence.
The 1930s, and the 1930s were a dark time.
Well, yeah, but if you follow the cycle, 1929 to 32 was a depression. Then they printed money. We had a rebound in the whole world economy from 32 to 37. But we had then a wealth gap, and then we had populism. Okay, the word to describe the most important influence in the world right now is populism. It's no longer central banks most important. Through most of my lifetime, they were most important economic factor. No longer traditional fiscal policy. The biggest force, and how it plays out in the world over the next number of years will be populism. Populism, it could be populism of the left or populism of the right. It tended to become more extreme. I think we are entering a period where it's worldwide is going to be a more important issue. Those extremities were the communists and the socialists on the one hand and the fascists on the other. If you follow that through in terms of the degrees, populism is a force that needs to be understood and dealt with well. Because the real question is it going to be smart or is it going to be stupid?
Can you think of an example in the past, these relevant examples, whether it's the 1930s or another era in history when populism was smart?
Well, FDR was considered populist. Okay? When he came in, he was considered a socialist. He turned things around and so on, and I would have said he handles it by and large smart.
So we need another FDR.
Well, we need smart, right? So the word FDR or the policies of FDR had pros and cons, and I don't want to encompass everything in there. But I think that we need calm. We need to be collective.
Hang on a moment for I just have to ask, because we're drawing comparisons between leaders and their styles. Calm, collected, thoughtful, careful. Are those words that you'd use to describe the Donald Trump that you think you know?
They're not the words that I would use to describe the Donald Trump that I have come to know in this way. They are, on the other hand, possibilities of the people who are around him. I mean, those words I would use for some of the people around him. Mm-hmm. And so the question is how those interactions exist. There are possibilities here, is what I'm saying. I'm not making conclusions. I don't want to rush to make conclusions. I'm saying there are possibilities here. And if it is done smart, it could be quite something. And if it's not well engineered and it's impulsive, that's why I prefer to say he's going to be aggressive. And the question is whether he's going to be aggressive and thoughtful or aggressive and reckless. That's the question.
The animal spirits that you talk about, they've already been revived to a certain degree. Look at the appetite for risk assets since the election. It makes sense conceptually. Does it make sense from the standpoint of an investor? If you look at the degree to which equities have rallied on the expectation of growth, and if you look at the way bonds have sold off on the expectation of inflation, do those moves make sense to you?
Totally logically. And I think what they've done is to convey what now we know. You know, you change tax rates, you hear the policies, you have expectations of tax law changes and so on. Yes. But there's more than that, too, here, which is interesting. Businesses which are thinking, where do I have my business, are changing where the consideration. Should I set up a business in China, or should I set up a business in the United States? Okay, now you have a more protectionist United States borders, and you have an environment which is business-friendly. Let's say lower tax rates, and it's okay to make money and to make things happen. So it's a business-friendly environment, which also has rule of law and property rights. So the United States becomes quite an attractive place for businesses to be. So that there's movement of that sort that also has a possibility in terms of stimulating. So these possibilities exist, right? Now the question is how they're engineered. So yeah, I think that there's a lot of possibilities. Very similar to 1980. If you take 1980 as a point in time, no one would have imagined what happened in the 80s. Okay, the 80s was a period in which we had, well, I don't want to get into all that because probably it'll take too long.
So it was not that many months ago that you and I looked at the world and you said we're living in an era of zero to fractional interest rates in the Western world, and on the basis of the near zero risk-free return, your anticipation was that the stock market might return 4% a year for the next several years. Do you need to change your view now?
I think the returns are going to be low. The most likely situation is that the returns are going to be low. And the only possibility that they can change is that through stimulation. In other words, do they raise the actual level of growth so what we're discounting is something better than we were discounting? Mm-hmm. And the possibility of that now exists. But
that's what seems to be priced into the stock market today.
I think what has happened is an improvement. But nothing from here, it's a question mark. Because
it's not structural yet.
When we've had the rally in stocks, we've essentially, as a result, lowered the expected return if we don't have that growth, right?
This is true.
Right?
We're starting from a higher point.
We're starting from a higher point. So the future expected returns now are discounting, if we have normal growth, are now discounting. So where we go from here is really dependent on whether growth surprises on the upside relative to where we are right now in our calculations.
How much would growth have to surprise?
Right now, stocks, in my opinion, are modestly attractive, but not big-time attractive. And whether they're going to begin a big bull move is going to be a function of this engineering exercise. You know, how long does that take? Is it something that just fizzles out because it's a good concept, or is it something that becomes sustainable? And the honest answer is, I don't know.
So they're modestly attractive, but not very attractive?
That's right.
Is there anything that is very attractive?
There's nothing that is very attractive. I mean, hardly anything that is very attractive. So.
And Bridgewater scours the globe looking for attractive things.
Yeah.
Right.
I think right now it's a time of questions. It's a time of uncertainty. And I think that's a time for relatively lower profile. You know, there are possibilities. I don't want to get into our market positions, but I think that between now and 6 months from now, we're going to learn a lot. There's political conflict issues. You know, let's say the Trump policy as it regards China is a very interesting question mark, because I think politics and global affairs is going to have a bigger effect than it normally has. So on that, let's say the China thing, to take the two-China policy and to make it such a public issue wouldn't seem to be a good move. In other words, normally, negotiations exist behind the scenes. When in a political year, you bring that to the fore, and for both sides. So now it's a public issue, and it becomes a face issue in terms of China.
Right.
How does Donald Trump's face, will he back down? Will somebody back down? How is this going to be negotiated? That wouldn't look like, from an outsider's point of view, you take a look, that wouldn't look like a smart move. Is that a smart move? It's hard to figure that it is. The politics of it, the conflicts of it, is going to play a much greater role than traditionally politics have played. Politics have always been a factor, but I think populism and politics in the next year are going to be more important factor.
If you believe, Ray, the way that you do in the rise of populism and the force that it's going to bring to bear upon the globe, politics, the economy, presumably financial markets as well, how do you express the view? Who wins, who loses? What becomes attractive as a result? What becomes unattractive as a result?
Well, globalism is threatened. The multinational corporation is in jeopardy. Emerging countries are threatened. Domestic companies are benefited. You know, there's a whole host of those types of things that go on, right? Those are, the question will be, will the openness that began in the 1990s with trade agreements and globalization continue, or will it reverse?
If you believe in the power of populism, do you also believe that we will see it manifest in new leadership in France and new leadership in Germany, for example?
So I'm saying that populism is an issue. I don't know whether it'll be defeated or whether it will win. And I don't know whether it'll be managed well or managed poorly. In Spain, it was defeated.
For now.
For now, right? And so the question is whether people of the middle, thoughtful people or inclusive people, will end up remaining in control and doing prudent things, or whether that populism. So when you come to those countries and you say Spain, very close to being changed and the populists gaining in control, but I would say the populists have not been in control, and policy has been an excellent policy as a result. What in the UK, it's more a populist movement to make the decisions. If you go to Italy and you go to other countries, Northern European countries, Finland and other countries, it's a question. The biggest threat to the European Union and the euro is no longer a debt question. It's no longer a central bank question. It's a populist question. And so when it carries for Europe or it carries elsewhere in the world, that has to be understood.
Given the fact that the turn inward favors, say, domestic companies, does it also favor the largest, most powerful economies? And by extension, is it thus good for the dollar?
It's more that the dollar is the world's reserve currency. And as the world's reserve currency, a lot of countries and companies have debt in dollars. And when they have debt in dollars and they have protectionism, it's definitely bad for them. That's good for the dollar. When the dollar goes up, people think, okay, it makes it more expensive and that's a problem. While it makes it more expensive, it's a reflection that the demand for dollars is good. If you had anything, that's a good thing. The question is whether you can lower interest rates in order to offset that. That's what 1980 to 85 was about. So it's an engineering question. But in any case, it's not good if you're short dollars.
No. And if you need to lower interest rates, not that good if you're close to zero. On the subject of rates, it was not that long ago, perhaps a year and a half ago, Ray, that you thought we would have a perhaps brief tightening cycle and then a reversion to quantitative easing. Is that still the way you look at it, or have these things that we've been discussing changed your perspective?
About a year and a half, 2 years ago, a lot of people in the Fed said that they were going to raise rates, and I believed that they couldn't raise rates without the problem, and they didn't raise rates, and they were very, very long in not raising rates. And I thought that the deflationary forces probably would be greater and then eventually more likely than the significant tightening. Now I would say there will not be a significant, there'll be slow tightenings. I think that the Fed will be behind the curve and let this go, but even who we're going to have in the Fed and how that's going to work is yet to be determined. But in any case, I think, to answer your question, I think that there'll be rate rises, slow rate rises, but the underlying growth will be stronger than I had expected.
Does that mean a bond bear market?
I think it means a bond bear market. I think it means a bond bear market, but not much, because a bond bear market's determined on how rate moves rise relative to what's discounted in the curve. And if you look at what the curve is saying, I don't think it's going to rise much relative to what's discounted in the curve. So it's a negative for the bond market, but it isn't a big negative.